All right. So
Got
I'm
it.
going to share my screen in a second. Window. Okay. All right, so I have your trading view pulled up. So if you want, maybe let's start off with the trades. Is there any particular ones you want to go over?
Probably just my worst trades. I
Okay.
think that's probably the best way to go
Yeah.
through things now.
All right, so the first one, so unfortunately I can't like sort high to low.
Oh man. Okay. Let me see, because I have it pulled up. And I can sort it. What would you say is the best way to like categorize like your worst trade? Is it by return percent or
Yeah, I would go by the percent return will be like what we're basing the best and worst trades off of.
okay. So I had a snap trade back in September 23.
Yeah, 23. Okay.
Yeah, it was
You can see
about
moving around, it's really just the glare on my end, so it's you don't think I'm nuts. So I do have it pulled up. I do see it was like a 9% loss.
yeah, I may because I may have like went over like just looked at them and kind of made a few notes.
Mhm.
This was still like relatively early when like I kind of just was excited to be in the market.
Okay.
So there was times where I was doing stupid things like just going in, not placing a stop right away, and thinking I could just like watch the market and um, put my stop when I thought was right. But
Mhm.
I kind of realized like, no, that's not a good idea. Like, so I stopped doing that. Now I like place the order. Like here, I probably would have placed the order like the first day around there where you
That's
have
a
the
that's
market,
77 area. Yeah.
instead of selling it like all the way over here.
Mhm.
But then in hindsight, it gapped down. So it could have been a lot worse, right? If
Yeah.
I didn't sell it.
So for just like, and I might have mentioned this on like the last chart talk, so I might be like repeating myself. I don't know if you heard it, but it was like when I do these reviews, like this is the first time we're doing it. What I
Right.
typically see is the first month we're going to go over the worst stuff. So like this 10% loss, and we'll go over like what we can do to fix that. But as the months kind of progress, we slowly move that like, okay, worst trades 9%, next month worst trades 5%. And then you slowly start to tighten up as the months progress as we continue to do this, and we continue to look and see the mistakes that you're making to avoid them in the future. So it's very common, again, with this, like you mentioned, you bought it, you were kind of willy-nilly, I'm going to figure out the stop at a later date. Can never be that. If you can't put the stop in the moment you're in the stock within that same day, this trade's more likely going to be a disaster. And again, it did gap down, it got smoked, it's even lower now, but this could have been an easy mistake that at that time, and maybe you forgot that earnings were coming out and you didn't sell it, and it gaps down, and then you're not going to sell it then either, and it continues to drop down into the 20s. This one little simple mistake turned into a 75% loss, and that's something that we just never want to see happen, and a thing that we try to avoid as much as possible. So again, with this, I understand the getting into the group and wanting to trade. I get that. I've definitely been there as well. But you have to just be very consistent. If I'm putting this buy stop in or I'm buying this stock, the same day I have to put the stop in. And 9 times out of 10, even like this, if you're buying this all-time high breakout, the expectation is it should break out and it should trade higher. So anytime that it's going to start coming down closer to your price, it's more than likely going to go much lower. And especially the prices that we're buying. We're swing trading. We're looking for these short-term, fluctuations in the stock. We're not long-term investors here. We're not trying to hold the same for 5 years. So and my point is we're not giving these names like a crazy amount of room, meaning that like our stop is more likely going to get hit if the stock is pulling back. And if that's going to be the case, it's much easier just to get out sooner than later. If it's going to trade higher, that's amazing. That's the ones you want to sit with. But once they start to come back down, like in this one you mentioned, like under 77, with you 100%. It would have been at the same spot I would have had to stop. You would have gotten out there, would have been, 3-4% loss, would have been no big deal. And we could, you could have avoided the 10% loss. But that's, again, why we're doing this now.
Right. No, I completely understand. Okay. Yeah, I think it's always when like you look back and you see what actually happened, and you're like, wow, that was dumb of me to do, right? But in the moment, you're kind of like, I'm a fucking genius, right?
Yeah. That's always going to be the case, but that's where, like, even sometimes with my trades, when like if I get out of them, like for me, for Oxy, for example, I'll give you, and this is like very similar to like what we don't want to happen, like with you at Snapchat. Like, say you forgot, it had earnings the day before, you forgot to get out, you got to get stuck with it. Me for Oxy was that exact example where I was, again, it's hard to remember, and you probably weren't even remember back then, but pre-pandemic, energy was coming in, it was basing out, and I was just buying up through this base. And then the pandemic starts and the name just drops like a rock. And I had that same mistake as you, was I didn't have that hard stuff put in, and then I got trapped in the name. And fast forward 2 years later, it took that much longer for it to get back to my price. And then luckily it had an amazing breakout that I was able to make some money in it. But even with that, I was in this name for so long that when it finally got like my cost basis was like in the 40s, when it ripped to 48, and now it looks like such an insignificant move, but this type of move looked insane. So it's like, all right, I'm going to just take the money. Like, I'm done. I had the name for 2 years. I'm done with it. I'm taking the money. And then like the next day, it has just this insane day. And it's like, what an idiot. Like, one more day. And again, I wouldn't have sold, like, again, I don't always sell into profits. I usually get stopped out. So I more than likely would have been in this. I would have sold some like this day, even though it's still higher now. But like, I would have probably been out had I not like prematurely gone out like the next day, like somewhere in this range. And it's like, those are just like things like, oh, God damn, like 1 day difference where same thing, and I just trailed my stop like I always do, and just had a lower day stop in, I still would have been in this trade. And I more likely would have gotten shaken out here like this following day. And that's how I trade. And this was the one time where I like deviated from that. I'm like, I'm finally up in this name. I can finally lock in a profit, just take it. And then I took it and it traded higher. I should have gone stopped out, $6 or $7 higher. But that's like a recent lesson that I'm just learning on my own. But it's always a constant lesson. And the sooner you can get out of those names for the tiny losses, you don't have to sit with them like I had to for pretty much 2 years as it worked its way back up. And even with Snap, had you made that mistake of not getting out, it probably would still be another year before we see it back up at that price. And that's where it's like so much easier that day of to just get out than thinking time is going to be on your side and it's going to work in your favor.
Yeah, dang. Yeah, that would have been a big loss. More than 50% for sure.
I've had enough round trips where I know with like certain names it's just going to take way longer. Like even me with Baba, like Baba is my current, worst name. Clearly this thing is just in a massive downtrend. But this is not a name that I'm going to like bitch out of and just take a loss in. Like, I just know that eventually these downtrends change. Eventually they base and then they kind of work higher. And that's just from, trading for long enough that I'm not going to like, where other members were in there like, oh my God, Bob was going to go to zero. And it's like, it's just what happens with the market.
It's because you also understand like the whole like concept of Baba, right? I remember you mentioning that like you understand their business and like
this is really like more like when I say like a long-term hold, it's like I want to just broadly trade the chart. So Baba's the high was 300, it's down down into the 90s. It could still probably go down into the 70s and lower before it really bottoms out and starts to reverse. But for me, like, I'm not going to really sell any until it retests this 300. And if that takes a year or 2 years or 3, I'm not really in a crazy rush, because from 100 to 300, it's 300%. So if it took 3 years to get back up here, that's 100% a year. That's way more than the overall market, but that also may not happen. But that's just kind of my thought process. I'm
okay.
100%, 200, 300% in these longer term names. I'm not going to try to just hold them. Oxy, it's like, I don't care about Oxy. Oxy was just like a mistake. It was a swing trade that was a mistake. I don't care about their business. I don't know them as well. I use Bob every single day. So that's just the different convictions in the names. But anyways, going back to some of yours, I see we got this MRO, which is similar, 8%.
Yeah, that was pretty recent too.
So,
I think that was because yeah, I have some notes. I was looking at that bull flag, like at all-time highs,
mhm.
kind of at that entry. Where it's the 20 above 22.
Uh-huh.
Kind of got in and then it gapped down, right? Like, what is that?
You got in what, like this day right here?
Yeah, and then I think it was Monday. It gapped down. My stop hit.
Your stop pretty much is like you probably had like a stop under 21, gap down, and just hit you right off the open, right?
Yeah, my stop was 2075. That's what I went with. Maybe could have.
Oh, 20, so yeah, so 27. Yeah, so you were going, let me zoom in a little more. You were going verse here, and then it gapped. So this is like a perfect 15-minute rule thing that you could have, you more than likely, I'm not saying you wouldn't have made money in this, but this is an example of a trade that you lost money in that realistically you could have gotten broke even. And that's where we use the 15-minute rule. So when you bought it this day, when a stock is gapping down under your stop, what you want to do is first, when this is kind of happening, you really have to cancel the stop because that market order is literally just going to trigger right off the open.
Right.
The 15-minute rule, and this actually held perfectly, is when the stock gaps down. But this is a good lesson because when you see it now, the next time this occurs, you should remember, okay, with MRO, I lost 7% because I left the stop in when this is now the 15-minute rule. I cancel the stop. I let the first 15-minute candle bar close, and then I put the stop below that stop. You don't want to put it to the penny, but even this one, the low was $20.16. That's the first 15-minute bar close. You would put it underneath that. In reality, you'd probably just go under the $20 figure, like you would go 1989, just to give you that little bit of cushion. And you can see the next 15-minute bar closes like shit, but still trades above that low day. Next 15-minute bar, let's see, still holds 2015. That's like super perfect. And we would still want to give it a little bit of room because you're already trapped in it anyways. And that's where it's okay.
Yeah.
Really, like the $20 whole figure, that's kind of the app. I put my stop underneath that. And this day kind of sucks. Next day, you're feeling a little more relieved. And now the third day, you're not going to want to sell it. But that's oftentimes when, like, even for me, I'm getting out of the thing. Like if I got trapped in the 15-minute, I got trapped in the name more worse than I was expecting. The trade's already pretty much failing. My best case scenario is I can more likely break even or make a little bit of money in it, but it's going to be hard for those trades to really turn around and like you crush those, unless you're just like, I just from my own experience, it's usually those trades, like if I can get out of them break even, it's a gift. If you can manage to really respect that stop and you can still hold it, that's amazing. But like to say like you're going to hold the 15-minute rule and sell it at 25, I think that's a little unlikely, but having that 15-minute rule and then catching that little retracement back to the area and you can get out of it clean, that's more of, I would say 9 out of 10 times, that's going to be kind of the outcome of even just you mentally, you're going to be like, oh, I was down 10%, back to break even, just get me the fuck out of this name. And that's fine. So this is probably one of the bigger lessons other than just putting in the stops of 15-minute rule, it's gapping under my stop, cancel the stop, let the first 15-minute bar close, and then place my stop below that 15-minute candle low. And again, if it's very close to a whole number, you got to give it that little bit extra room. Because again, here, if you gave it that extra 1%, you can make the 10% and more back versus locking in the 8 or 9% loss. So this is kind of a good loss to have because now hopefully you're going to remember why we use that 15-minute rule.
Right. Okay. I think SOB, I think it was the same idea, same concept.
Yeah.
Just kind of get in and then a gap down. My gap hit or my stop got hit.
Yeah, so this is it's like interesting because it's like even with energy, it's really been out of play for kind of the last 2 years. We really haven't traded an energy name since. And then
Yeah.
When you try them, they all fail like the same day. But this is probably, we're gonna say this is gonna be probably the same story. So
Oh man, yeah, that's a good one, huh? Once I finally decide to trade it, huh? And then it's just gonna fail.
yeah, no, I mean, it's just, well, let's see. But I'm saying this is like another 15-minute rule where we're gonna see if this one would have worked. So you got stopped out.
I had my stop 38.89 with the entry of 41.
Okay, so you had a, I'm sorry, say that again. So you got in when?
The 11th. So, and the price was above 41, 41.05 around there.
Okay, so you bought bought it with a figure, which is the probably, really the right's 41. Which price you say you bought?
What happened?
What price did you buy again?
Well, I have it on my notes, not exactly like the price that I got. Oh, let me check the. Should have it there.
I'm just getting a call quick. Just give me 2 seconds. Sorry.
No worries, man.
All right, sorry about that. Okay, so really quick, what was your entry in this SLB?
I think I may have messed up the entry on this one.
Yeah, because it seems so
On my transaction is like 40.62.
okay.
So I guess that's a
So
bad entry.
yeah, so we have 2 things. One is you're trying to sneak into the breakout, and you could even though this thing still failed, the extra half a point and just to buy 41, like you can. And again, I don't particularly trade a 15-minute chart, but you'll still see it on the daily where you can see, and even on the 15, you're going to see 41 was kind of the breakout. That was confirmation of it. And you had that confirmation this day. And again, it still failed, but at least this day, when you bought up through the breakout, you still got the $1.50 move. And again, if you were day trading it, maybe you sold on the pop, but even if I was buying it, I probably would have been out break even. But one is just waiting for the breakout, trying to sneak in that extra half a point like this is often becomes more costly than just waiting for the proper spot. And this is something that, even I've had my own mistakes with when you try to, I can find this little deal here and I can get it at a better price. And it's just often way easier just to wait for the breakout. But you said you had your stop, I believe you said under 39.
Yes. 38.89.
Okay, so yeah, good stop. Again, you can definitely see that there was a spot, but this is again going back to that 15-minute rule. And same thing, you probably left the stop in, and it probably triggered you where this thing opened, right off the open. It got you, you pretty much got like the opening tick. So same thing here. If you follow the 15-minute rule, these are now 2 trades that we could have broke even on SLB, which is 6% loss, and you could have realistically broken even in on the other one, MRO, that was like an 8% loss. So you cancel the stop, the thing opens down, trades up for the first 15 minutes. You put your stop underneath that 15-minute bar low, which again, it's so close to, again, that 38 whole number, the support area of the flag. You put the stop under 38, 37.89, and it trades higher. And by the end of that day, you're basically break even, and you either get a break even or you hold to the next day, but you still got to respect that low. And that's that new deciding factor is, okay, I gave it the 15-minute low, but that's now my new stop. That's how I have to trade it. If I want to continue to hold it, I need to really respect that stop until at least it's above my price. And if you don't want to be in it, that's fine. And again, here you would have lost 50 cents in the end if you closed at the end of the day, which is an insignificant loss. So this is like 2 of these trades now that with the 15-minute rule, you would have broken even, made a little bit of money, or lost 0.5% in. And that's, again, we're taking, my always big focus in these is not really like the best trades, because those, you obviously did a great job at just obviously do more of that. But with the worst ones,
right,
these are the ones that we can get rid of entirely. And these are 2 big ones. The snap one, that one is just put the stop in. But these two specifically, it's like this should, these should be avoided going forward and, working your way out of them. Let's see. All right, so just real quick, I want you to reiterate to me. You're in SLB, you bought up, we're gonna say you bought properly. You bought to 41, the next day the stock is gapping down underneath your stop. What do?
I would cancel my stop,
Okay,
right? I would wait till the 15-minute bar closes
correct.
and set my stop below that.
Okay. Now, if it's near the figure, are you going to go perfectly underneath that 15-minute low? Where are you going to place it? The low right now is in this gap down. The low is 38.17.
I would set it, I would give it a little room below the figure.
Okay. So what? So
I'd say maybe
38.17 is low. Where are you putting your new stop loss order at?
I would say 37.89.
Perfect. Okay, cool. I just want to make so just so like with some of these things, I want to make sure that you're getting it, and I don't want to just like because for me, I can put the stop here and
You can tell me like, oh, do this, do that, and then but if I don't get it right, what's the use?
Exactly. Yeah. So
I have a question.
mhm.
So I saw the Q&A video that you
Uh-huh.
guys did, and you guys were talking about placing your stops and figures and below the figure.
Uh-huh.
I think it was Heaven was talking about setting it at 89,
Uh-huh.
and before it used to be like 99,
Mhm.
like right below it, but people kind of caught on to that. Is that what you normally do? Like kind of set it or give it a 89, 79, or just like
I'm
kind of just depends, right? It depends.
no,
on
I'm always I don't want to say 100% of the time. 99.99% of the time, I'm always going to be 89s.
Okay.
With everything, this stock's at 36, the stop's at 35.89. Like every single, and I even post, when I post my stops and buys, it's always the same. Always buying 05s on the way up, always getting out 89s on the way down. When me and Shake were way more day traders years ago, we were always 99s because we were watching the intraday action way more closely than we do now. So we were really trading the 15-minute chart, the hourly chart, the 5-minute chart, where if the stock was coming, and we would definitely, and we'd have way more size in the positions than we do now, that those 10 cents can get, you got 2,000 shares, 10 cents is, extra couple $100. So it was just more of like the dollar volume that you had in the stock that like those extra few cents really made a difference. And again, we were watching the order book. We would see there's 50,000 shares at 36. And as it starts to print and people are hitting the bids, we know that once that size is gone, it's going to flush. So we'd be watching the size and either have the stop in, or we would just be taking out that last, like it's 10,000 shares, people are hitting bids, 9,000 shares, 8,000 shares, 7,000 shares, 6,000, 5,000. We have 1,000 shares left. We take 1,000 shares and we're out, versus knowing that once that breaks, it's going to flush lower. But from a swing trading standpoint, we're not looking at that kind of stuff all day long. And there can be times when it'll tick 99 or 98 or 97. And that's as far as it's going to go. And then it's going to turn right back up. And just from countless amounts of day trades, giving it that extra like 10 or so cents was enough wiggle room for those like little intraday shakeouts that you don't get involved in too many of them. Like if it's going there 89s, it's probably going to continue down the next figure and you just want to be out. And again, that 10 cents on like the position sizes you're trading, like for SLB, you bought 10 shares. So that extra 10 cents is $1. It's not going to make or break.
Crazy.
You're not even going to notice the difference with that. If it was 10,000 shares, then it's the 10 cents you're going to care about. So yeah, we're always 89s on the way down, always buying 05s on the way up.
Okay.
So even for me, as we're talking about this, I bought this BKNG, and again, my own 15-minute roll lesson. But again, I'm talking with you, so I wasn't really watching this. I bought up through 1850. I bought it versus 1800. So I was risking $50 and I had a stop under 2,000. And today it looks like I got stopped out at 97.50, whatever this low was, more likely. So same thing for me. If I was watching this name off the open, but this again is not really like, I don't trade like that. Like I don't care about, I'm not as active enough that I'm watching for this with every name. I'm just letting them do its thing. This shook me out. When I check later, more likely my price is going to be here. But again, I still made, it'll probably be about 150 points on 50 points risk. It was 3-1. You know, that was still a great, you know, for me, I don't even care. Like I made the money in it, you know, I made probably 6 or 7% in 2 days. And I had, like, you can see these online, this was like where my target was. You can see like the notes, it's like take profits. So that's like where I was looking for it to go, but it is what it is.
So then that same concept, when it gaps down,
Mhm.
when it gaps up, it's just like the
Gap up,
same idea.
Yeah, no. Gap up, it's in your favor. You don't want to fuck with it.
Okay, I was like, oh, so
wanna
when
get
it gaps up, do you set it?
No. When it's working in your favor, you want to like let it work. You don't really want to proactively get in the way. On the gap down, again, you're clearly wrong in the idea,
Okay.
and it's trying to salvage that wrong. Because it's not really wrong, it's you're wrong and you're risking more than you plan to risk initially. So you're like really backed against the wall here, and it's trying to get you like back off hole, like the pressure's kind of off, and these are the simple steps. Okay, let's put the stop, let's put the stop on the 50-minute bar, and let's try to salvage the trade. When it's working and it starts gapping up, you don't want to get too much. Again, for me, it was like, for this trade, gap up or not, I'm buying it off this low. Any continuation upside, I'm going to just simply trail it no matter what. Even though this is like a minor gap, this is like,
oh, you're trailing it from the
yeah. It was just a normal swing. Like if I'm buying, if I took it through here and it gaps up, same thing. I'm probably going to have a stop underneath that low a day, because if it goes below that, it's more than likely going to come back anyways. And
which it did.
Exactly. Eventually bounce back.
So
So I'm still going to trail my stop in the winners, just like I did here. But this was an example of, had I been watching this thing more closely and I did the 15-minute rule, instead of me getting pushed out right off the open, I would still be in this name. What is it? 60 points higher, which is, and even in 2009, that's still, a nice chunk of change. I think yesterday I was up almost 10% in this name. Yeah, so I made 5, I was up about 10. So that's a nice little, difference in a swing, and 5% swing in 2 days or 10%. But that, again, we're talking about like a winning trade. So it's like I made 5%. Had I used it better, I could have potentially made 8 or 10%. And then for these ones, these were 5 to 8% losses. With that, we could have made them break even or profitable.
Okay.
Let's see. GDYN. Okay. So walk me through this GDYN. GD. Am I looking at the right name? GDYN. This is a what? Oh, this was back in December. Okay. I think I smoked. All right, so you bought up to 38, December 15th. December 15th. Okay. All right. So what was the trade here?
I think I was just trying to sneak in at the bottom. All right, look at it, because it did gap up. I think big picture wise, I'm assuming that was because of earnings. I don't know. I'm looking at the.
It wasn't earnings, but I know what you're doing. So this was, I wouldn't say we're trying to sneak in. I would say this is more like a support buyback, which I'm all for. You can see like this was, let me change these lines. So this was, we can see kind of like the earnings flag that it was in. You can say this was probably more of the flag. Again, you can say like the wicks were up to 42, but really it seemed like the buyers were kind of in this like $4 range. And I'm all for you buy, it comes like this was like a really good failed trade. It came into support. And the key thing here is you didn't buy it this day. Let me make this stuff a little bit bigger so it's like easier to see. Like if you bought it this day, not so good.
Okay.
The next day was, so it pulled into support held, and you put the buy stop more than likely above the prior day's high of day. All very good. So you were buying up off of support, which is great. You let it pull into support and show that it was holding before you look to buy. All great things. You had to stop below that low. Again, for 2 days in a row, 36 held. 36 was holding all at least that prior month. All very good things. Whatever this was is probably, this thing doesn't do that much volume to begin with. Oh, no, it's all right. So whatever reason, it gaps up, closes like shit. And again, it's just still chopping around this range. And you eventually get stopped out down through that low. And you got the half. So was your stop 35.89 and you just got like, I guess that like 20 cents of like slippage? Or did you have your stop like at the half?
I wish I could remember, bro.
That's all right.
I wish I
So
could.
again, it just seems like, in my opinion, it's like you did everything good. You probably had to stop 36, 35.89. The name probably was trading a little wide. Even now it's trading in like a 10 cent, has like a 10 cent spread when it's at $11. So you probably had to stop 89, and that was kind of the next print was 20 cents lower. So this is like this is like a good failed trade. You did everything right, it just didn't work, and that's just a part of trading. So far this is like this is like an A+ failed trade. And it's good you didn't kind of go back to it. And of course, obviously, after the fact, definitely a great reason.
Oh wow,
this thing got destroyed.
I didn't see that.
But that's also like not.
Crazy.
It's also not that uncommon with the like more recent IPOs. Like this thing's really only been trading for about 2 years. The real good trades in these, like especially these IPOs, is when they start to come back towards their prior IPO high. So this is the IPO high. And usually it's a year, 2 years it takes. And one of the members, I think it was Django, mentioned, which was it? Was it CMS? No. What the hell? Oh, no, it was.
CB?
I think, yeah, it was this one. So this one's a little late to it, but this was like kind of the same thing. This is the IPO high. It retests it, still too soon. Then gets smoked for a year or 2 years, works its way back up. And like, these are the times, and we're really gonna catch it perfect the first time, but like this area up here, like at that, major attempt, third or fourth, fifth time, like much more higher probability of getting those big up moves. And you can see, 30 to 50, 25% move, 30 to 60, 50% move. And this is in, 2 months. So these are like if you can focus on these spots, again, even for like us now, we're like a little late to it, but same thing. I want to buy up through 60. Like I don't want to buy 59.50. I don't want to buy 59.44. I just want to buy above 60. And at that point, to give inverse 53 or wherever that like prior pivot is going to be. But with these IPOs, we want to be like buying with that move. Now for yours, it just didn't have the legs. And that might be with this CIBI, like 60 this might be the equivalent 60, where that CIBI, this is 60, it breaks it goes to 70 or 65, and then comes back and it does the same thing. You can easily do that. And if that's the case, we'll buy 60, it'll go to 65, it'll come back to 60, and we'll get out. And we'll break even or lose a couple bucks, and we'll avoid kind of this disaster. But those we don't know, like when it's at highs in the past, for most names last year or two, buying through highs was a profitable trade. The start of this year, we've had so many flags that now they're just getting to be topping patterns and they're breaking down and kind of resetting. And now it just seems very obvious because all these stocks have had these moves where, 2 months ago, that was not the thought. It was, we're going to buy this up through 40. It's going to go to 60. Not, it's going to break down through 30 and go to 11. Like that would be no one really would be thinking that would be even a logical next thing to happen. But that's just why the market is there to trick us every once in a while.
Right. So in that case, for GDYN, the best stop would have been below 36, so 35.89. Either way,
No, where you got out, I think
right? Yeah.
where you got out, I think was perfect.
Okay.
Bought it here. Like this was perfect. There's not literally, if I took this trade, I would have done the same exact thing. You bought up, thing kind of failed. You gave it versus the proper figure, and it shook you out. And there's really nothing different I would have done, because even this day, it's like it's hard to say, oh, I would have sold it up here because if it's gapping up. If I'm buying into this flag and it's gapping up, things opening up, what are 4 or 5% off the day, you were thinking, as I would be thinking, is this thing going to open and just break out and go? And that's what we're planning for. And the opposite happened. But there's nothing different about this trade I would have done. I think this was a good fail trade.
Good loss.
Right. Again, there's going to be, but the main thing here is like, again, we're looking through these trades. You like more recent, March, yeah. So 0.5% gain, 0.5% loss, whatever. It's as the months go by, we want to start to see like no more of these. We want to see more of these, not the winning ones, but we want to see this be bigger. But the losers, we want to get them to start to be more like this, where it's coming back to the price. Just take it off, because it's more likely going to get lower anyways.
Yeah, I think when I was trying to, because that was the SPY, I was just trading it. I was trying to be like a little more day trading, and I was like, oh, this isn't for me. I can't really do it. Like look at a 15-minute chart and then try it out.
Way too much work, and especially for like the amount of size you're trading, it's going to be insignificant.
Yeah, almost pointless. Yeah.
Even if you traded the SPY, you bought the SPY at
that gap down.
The SPY at 420 and you sold it at 490, $60. It's $120 in 2 shares, and that's fine. There's nothing wrong with that. But you're not going to, if you bought at 420 and sold 430, you're talking about $16. So it's just not going to be, it's not going to be worth the effort. If you think about like your hourly rate, like what you make working, and if you had to sit there and watch the SPY for 3 hours and you made $16 or $20, but you make, I don't know, $40 an hour at your regular job, it's like you were better off just doing your job than doing this. For someone like, there's a few people that day trading can make sense. Shake, doing it for years, millions of dollars in his account that he could buy 1,000 shares of the SPY, and a $5 move would make sense that he can make like a nice chunk of change on. But when you don't have that size and the time to dedicate towards it, it's much easier to continue to focus on the stuff where you can, okay, this is the level I want to buy. I'm going to set my stop. It takes 30 seconds to do that. Okay, I can look at the chart. Okay, this is the low at the moment. My stop is under 415. And then I'm back to whatever else I was doing that day that was not looking at, a 5 minute on the SPY, because it's just going to be more noise than anything. So that's kind of like the goal. It's like you want to be able to put the risk on where you're not spending hours of your day managing these positions. It should be, for you to go, if you have 5 positions on and you can, it's 10:30, 11 o'clock, like for me right now, well, as we were talking, I have these 2 orders in, or 2 stops in. As we were discussing your trade, I said, okay, I'm stopped at a BKNG and BXP. I'm more than likely stopped out of both of them. Cool. I probably lost $3 here. So I lost 1.5%. I made 5% in BKNG. Okay, cool. Done. And then I have these 3 orders in. Okay, cool. I'm in CTVA right now. I bought 52. I'm going to go put a stop in after this call at 51. It's $1 risk. HEBG, no order triggered, and CIVI, no order in. So like in a minute, I went through 2 positions I'm now out of. I went over the 3 orders that are in the system, and I know I have to put 1 stop in. And that was the extent of the amount of time I just spent on those 5 ideas, was in a minute or 2. and I can now back to more focus on your stuff, and like I'm done with my trades for the day. I don't have to like, all right, wait, let's see, what's the 15-minute doing, right? It's like, I don't care, I'll just put the stop in there after this call, and I'm done with those positions for right now. So that's at least the goal for me, and what I try for a lot of members, that they're not going to be quitting their day job to do this. This is just going to be like the added source of income, and just making it where it's very repeatable. You buy it, you put your stop in, and you move on to the other task at hand for the day.
Okay. All right. Yeah, I kind of started to fade away from like, it was kind of like a week or two thing.
Mhm.
And I was like, yeah, this ain't.
I get it. 'Cause
Especially the way the market's
it's-
going, I was like,
It's always when the
I
market,
can't do this. I think I was gonna get burned out like pretty
and
pretty
that's
quick.
always when, again, the market does a great job of like giving us something, and then we get accustomed to it, and then they change. So even like, pre-pandemic, we had this just super easy grind up for months, for October to February, quarter of a year, just every day, just tick, 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 like just grinding higher. Everyone got so accustomed to it. And then we got the complete opposite of, major stocks dropping 10% a day, things that no one had seen. Like, I haven't seen that type of action since basically 2008. It's hard to think back of a decade ago of what those things were doing. American Express at $7 a share. Like, that's just like, it's hard to even like think of those things, where the market gave us very little volatility, very simple uptrend to dramatic drop. World's ending. Now we completely reversed the entire drop in a few months. No one expects that. We're going back to lows. Now we're going to continue to break out for the next 2 years. And everyone gets super accustomed to no corrections, no pullbacks, just buy highs. And now we're getting a downtrend or a breaking down market. And again, just things that we're not used to. And when those little changes happen, those are often the times when people want to reinvent the wheel. Swing trading worked. Now, fuck it. Now I want to be a day trader. Now I want to short. I want to hedge with options. And it's like, by the time you figure all that shit out, we're going to be back retesting the high. And then it's like, oh, let me get back to swing trading. And then it's like, well, you should have been, so that's where it's like,
You should have just stuck to it, right? You should have just
stick to
proved it.
I saw it more so like people trying to like day trade the market in here. That was kind of recent, where no one traded the SPY the entire 2 years. Like, no one talked about it. Just like recently, no one talked about trading energy names, and now they're trading energy names. Give me 1 second. I got this lady calling me.
Yeah, no worries. Oh man.
All right, we're back. Sorry about that.
No worries.
All right, so let's switch over to some good stuff. So I do have here, it's at least the best one I can see so far, which was this AMEH.
Yeah, don't have too many good ones, bro.
I mean, again, when did you start trading it? Like, when did you start trading, Oscar?
Oh, like it's just barely been a year. Yeah. So
Yeah.
I understand, like, it's a year, I still have a lot to learn, right?
Yeah.
Things will come eventually.
Yeah. I mean, I think I always compare it to like when I first started. So it's like we're going over your worst trades and it's like 7%, 8%, 9%. And they seem horrible. When I think of like my first trade, it's like lost 50%. Like, and that was like my range. It was like would lose 50 to 80% in like the worst names, and the best names would be I made 10%. So it was like the percentages were just way off. They were just never going to work. And that was like the first year. And then again, you start to move the number in the right direction, but it was like a very big range. That was the opposite way you'd want it to be, where like you're kind of at a much more tangible range. And now it's like minor tweaks. It's okay, 15-minute rule, things like that. And we nix out the bottom of the barrel and we kind of keep moving up. So definitely not. And even dollar wise, if you look at, I can't see like your overall return, but it's probably nothing that's
losing. Yeah. I mean, it's been a year about trading with you guys.
Mhm.
And before that, I was doing like, I don't know, cowboy shit, like dumb money stuff, just buying whatever. And I was trading on Robinhood, looking at like the 5-minute chart that they have right there. And that's what I would base off. And like I had no control, like emotionally, I guess. I'd see a loss and I'm like, oh shit. And I think I lost like about roughly 1,000 like before. And then kind of like that's when I was like, oh, I should probably get serious. I met you guys and went through the program. I think a lot of things have changed. Like, so I recognize that like the growth is there, and really happy with that. I remember you sent one of the big pictures to go over like how was your account about a year ago, and how do you feel about that? And like I did it, and I was like, oh wow, like it kind of puts everything in perspective. Like, oh, you're on the right track, you're doing things right, but on the day to day, you're kind of like, okay, I want to hit it out of the ballpark or whatever. It's just,
yeah, and that's where it's like, again, just stepping back and saying, all right, the account was at whatever it was, $1,000 last year. It's at 2,000 now. A lot of that was the money going to weekly, but the account is still growing, and that's kind of the main thing. That's the main focus. And especially during times when it's more difficult, that's when you kind of focus on these things more so. Like you're more focused on like looking for things when doing less is often like the better route. But yeah, just it's good to step back sometimes and just see. All right, so this AMEH, we bought this earnings flag. So it's probably one of like the TE alerts. I didn't remember this name. So yeah, you bought up through, took some profits, amazing, kicked some into this all-time high, which did you mark it out? Again, it's hard to remember this, but do you know if you have like a limit order that you were selling into that? Did you just mark it out when it was up there? You don't remember? It's all right.
I didn't have a limit order, that's for sure. I think I was just watching it and like kind of holding.
Yeah, I mean that's a crazy. I mean it's great you sold there because like this is a nutty day, and this sell is very similar when like for me with Oxy, even though I sold it prematurely, I knew that like Django still had like a huge chunk. So like I obviously missed it. Like I missed the big move, and then on this this was Friday, and then you had news that George Soros was selling his stake in the company, and Buffett was increasing his. So you kind of had like conflicting opinions from like the more active invested crowd. But this stock was gapping up like 6% going into Monday. And it's like this thing is up nearly 50% in a week. It's gapping up, and it's going to be very unlikely, no matter what the news is, that the stock is going to now gap up, hold that area, and then trade higher. Because you'd have to like, I don't want to say you'd have to be an idiot, but you'd have to be pretty dumb to chase that name. And that's going to be a very small pool of people that are going to be like, yeah, this thing's up 50% in 4 days and it's up 60% more. I need this stock. Like that's a very small pool of people, unless you say short squeeze and like meme stock, then it's going to work. But seeing that, it was like for me talking with Django, because it was like, look, man, this thing's gapping up. If this thing holds this gap up pre-market and trades higher, like you got to be a hard stop under that low a day and just take the money. But as the open started to come in, this was, I think it was trading like 63, 64. It already started to come in pre-market into the open. So like that gap up wasn't holding and it was coming back in where it's like, this thing is gonna just, if this thing was ripping 17% on Friday, just as quickly it can reverse that move when it gets this extended. So it's like, you gotta really be ringing the register and taking profits. And that's what he did. And that's kind of like what you did. Or
what was that, November?
Like this thing was up 7 days in a row, and the biggest day is the last day when everyone's looking to get in, and you're selling into that, which is amazing. You get stopped out, you keep some, you get stopped out again, and now we fast forward to where this thing's trading at now, and it's a completely different stock, And again, same thing. It's just like, they have these amazing runs, and up here it looks so good. It looks like it's going to go to the moon. It's going to 300. And that when you start to feel that or think that, that's like, and that's often the hardest time to take profits because it looks so good. But that's, if you were to say, what is going to be in 6 months? Like no one's thinking this thing's going to 40. It's just like unimaginable. And that's when, even us for like LMT, it's like, this was an amazing move. But now it's like, we got to be thinking taking profits up here because this is a 20% move in a week. It's got, eventually it's going to have to come back, retest this, even though it has, crazy volume. It's gone so far so quickly that it's got that before that kind of like next move.
I feel you.
But definitely, great trade. And now this is the things where it's like, okay, that was your best trade, it seems, for now. Let's see if there's any other ones. Oh, okay, we got another one. AMD 24%. This was probably that buy up through 90. Let's see.
Yeah, November.
Oh, nice. Okay. I think a lot of guys actually missed this rebuy. When was this? This was
November
27th. Let's see. November 27th. Okay. Yeah, so a lot of guys were involved in this breakout, this 90 breakout, that we did a really great job with. Like most people really trailed this like low a day, and most got out this day. So it was like, couldn't have been a more perfect, 30%, 25% swing in a couple of days, where it's like you just trailed it by the low a day. When it took it out, you avoided the chop. And then again, you snuck back in here, which is impressive because you didn't shake yourself out. 108. So did you just give it verse 99? Like, how'd you stay in this?
Yeah, I think I had like a little trend just going right there. I saw that little wick. Let me see. I'm trying to get the same dates as you. Oh, it was November.
Yeah, this is the date. It's November 27th. This is where you bought at 108. So you bought through that. It's really impressive because it did pull in against you, and you stuck with it. And if you kept like a stop under 100, you would have gotten pushed out.
Yeah, I think I went with 99.50.
Wow. Okay, that's impressive. This is like, it's just crazy. It's like, to think of the difference, even this trade, it's like 99.50 was like 30 more cents, and it kept you in like that. It's just,
yeah, because there's that. I want to say that
this 99.
it looks like a doji.
Yeah.
September 20.
Mhm.
I went off that. It was coming really close to it. And
Yeah, these 2 days, 99.81 and then 99.82. So very close. So that's impressive. It's cool that you set into it. So let's see. Then let's see, 116, 130, 150, and then you sold on the way down, 130, 150. I mean, this is amazing. You sold 150 too, 150. Yeah, I mean, this is phenomenal. I mean, this is like kind of your trade of the year.
Yeah, I remember that trade. I was just, I mean, it was couple months. So I was like, oh wow, this is the
Yeah.
longest I've held something.
Now it's right back. So it's like, not to say now it's like you don't want to take the same trade again, but this is like those things where it's like you need to take profits because, again, up here, it's going to 300, looks amazing. And then
Right.
who would have thought it comes right back to, that prior price. So that's where, like, you can, you got to take those profits no matter, how good they look. Because when they do turn, no one's expecting this type of, 30-40% pullback. But again, same thing, the phenomenal. The only other thing I would say is, when these things do hold and they do start to get back towards your price, this is a spot where you like can try to add. And again, it's easier said than done.
Right.
That's like, okay, I bought this thing, I almost got stopped out. This shit is working. Let me, people often try to like dollar cost average on the way down. And that's just like a horrible process to get involved with. Because even here, even though this worked, like you trying to buy, 102 versus 99, it's like that's the shot that does not work. Like this is the trade where if you're buying here, this thing is more likely to failing and you're just adding more risk to the trade. But if it's getting back above your cost basis, and this is still kind of like a technical spot to add through it, and you don't have to go crazy, you don't have to like double up the position, but like that's often going to be a spot where it will feel hard to add to, but you'll have much more probability of, again, being, okay, of course it's easy with this, this being your best trade, but it's, it almost failed, it got back. And if you have the conviction, that's when you want to add. Even with the 2 15-minute rule trades, both of those adding back up, even though like in your head you're looking to kind of get out because it's coming back to your price, those are often going to be the times where just it pulled in, it's coming back, and it's more likely going to try to continue that trend, in the direction that it's going in. But again, both really great trades. And this is more so like with these two best trades, again, every trade's not going to be these amazing swings, but when you can continue to like trim make sure the losers are as tiny as humanly possible, you have, MRO, break-even trade, SLB, break-even trade, UPS, 2% loss, whatever, SPY, 0.5%, winner trade, 20%, next winning trade, 10%, next winning trade, 5%. And that's when you can like start to build where and again, there's nothing wrong with having all these losses. Like even for me, I'm usually wrong 60% of the time, but my average loss is going to be under 1%. So I'll be wrong all the time, but I lose such insignificant amounts that like, it's not going to piss me off. It's not like I have no problem going back to the name because I tried it. I didn't lose anything in it, and it doesn't like drag the account down. And that's kind of my overall goal with these reviews, is just making sure the losers are just as tiny as possible, because the winning ones, you're going to do, fine with them as you've been doing already. VRV. So we'll do this one and we'll go over one more, and then just so I don't keep it for the entire day.
That's fine. I kind of have to go to work soon too.
Yeah, I mean, we can stop now. Again, if you had
no, we could go over this last one and call it a day after that.
Okay. All right, so let's see. So July 28th, VERV. July 28th. What the fuck? July 28th, this day, you bought 56.
Let me see. So I pulled up my TD Ameritrade account, other transactions and whatnot. So I bought July 28th for 55.79. So bad entry off the start.
Wait, hold on. So that's all because I'm at 55. What the fuck is 55? Is that here? Like you bought this day? I don't even know how you got that price. Oh no, this got to be later. Oh, I'm looking at June. That's just fucking me up. Like how the, oh, here we go. Okay, so 50.
No worries. Yeah, I was like,
Oh, okay,
I
yeah.
don't know.
Damn, for a second I was like, I thought you were buying it here. I was like, what the fuck are you doing? All right, now this makes
Yeah, that would have been a bad move, huh?
yeah, I was like, what the fuck is that? Okay, so this makes way more sense. All right, so you bought through here, define little flag base, whatever you want to call it. You bought through 55. Yeah, you took some profit and then got stopped out.
Yeah, probably not a great trade. But...
Yeah, I mean, you probably, so you took a little profit a little prematurely, and then it goes, and then you get stopped out down through 64. The down through 64, I like the down through 64 stop a lot. That's more like how I trade. Like I'll just buy it and I'll just keep trailing until I get stopped out. But that's even one where like you probably could have even gone 65 because it's like even like this it's getting back up here. If this thing takes out 65, this thing's getting smoked. So it's like I see where you're trading it versus 64, but that's something where it's like in the especially with these like more recent IPOs, like $1 is going to be nothing in this type of name. That the tighter you can be with these, you want it. Just because again, any IPO, it's like if you're risking 5%, like that's I want to say you're pretty lucky. Realistically, on these IPOs, given how like kind of wide they trade, it's like you have to kind of expect like at least 10% of like real risk in this trade, and that's like even here you're buying 56, the real out's 48. You're kind of risking 10% if this was to fail. So with that in mind, when it does start to work, it's hard to sell it $4 higher when you were giving it about $6 immediately. So if this first sale was like you were kind of selling it up here, then it's like it's a much different trade. Like you're getting a nice little chop here, you're getting out of the rest, cool. And again, even now it's way lower than you thought, and that's just with these recent IPOs. But it's good that you made some money in it. I try to tell most people, especially newer traders, is try to avoid these IPOs for the first couple of years. I personally don't really trade them at all, except unless it's through like these IPO highs and it's like a significant base, just because I like that. I know that pattern. But in the intraday stuff, the real risk can be very wide. Again, you made money in it, so that's fine. But these can be some that they can be easy 10% losses, even if we try to trade them very tightly, just because they're going to be very wide. But again, all in all, I think the main thing here really is just the 15-minute rule. I think that's the big thing right now. Like your big focus for the month ahead is if these names do gap down against you, give it that 15-minute rule, and that will hopefully tie up some of these losses. That's kind of the main thing. Again, cheating the level by half a point doesn't seem like it's a reoccurring trend. It seemed like that was kind of one off from the names we looked at. So that's kind of the main bullet point, I think, on my end from this review.
Okay. 15-minute.
And again, I'll upload this on YouTube. It'll be private, so only members I've done reviews with will be able to see it, with yourself obviously included. And I'll put a little summary in the description of what we went over. 15-minute rule. Try to wait for the proper breakout. I'll put like a little summary, some of my clip notes of what we went over.
All right then.
All right, buddy.
Sounds
and
good,
then
man.
Going forward, if you found this to be helpful, we do this once a month, typically at the end of the month / beginning of the new month. And same thing as this, you send me this link, we'll go over those most recent trades for that month and continue to tweak these failed trades as the months progress to tighten up those losses.
Okay. Yeah.
And
Sounds great, man. Yeah. To be honest with you, I was very kind of nervous. Like I was like, to do a trade review, or I was very hesitant. Like I just thought, I guess negative. I'm like, dang, being called out of my shit. Like,
yeah,
I don't know, it's just something new, or like you just don't want to be called out on
I get it.
But
I
found it very helpful, man. So I just wanted to thank you for that.
Yeah, of course. I mean, if this was like 4 years ago, I'd be like, what the? I'd be like flipping out. But now it's like, even for me, I have to talk about my own worst trades on these because I can only give my own examples. So I have to talk about my own mistakes that I make. And you can voice those mistakes. Just there's no, it's like, this is what I did wrong. This is what I do next time. So much easier. It's just, there's no like having to make up a story. It's just much easier overall. And again, we're always just here to help. So we want to make sure that you're can trade at your best ability and we keep moving that number in the right direction.
Yes, sir.
All right, buddy. Well, you get your day started. If you have any questions, let me know.
Yeah, appreciate it, boss.
No
Thank you.
problem. Have a good night.